Good evening, everyone. This is Henry Gambell with simpleroptions.com, and in tonight's free video I'd like to continue following up with you in Google. Obviously at this point your extensions can pretty much be taken off the chart because now that the numbers are out and we've seen where this move has come through, the binary event has happened, and how did our strategy end up playing out? Well, when we looked at this a couple of days ago here in this free video series, we've been discussing the idea of looking at a butterfly centered around 1040, utilizing a $1,000 short put as the core part of the strategy, and making it balanced by making it $40 on each side. Okay, if that's a strategy that you ended up implementing, at the time it was about $10, and it didn't work out quite as perfect in this spot because of course Google had a better than expected move. They crushed their numbers. So in this type of a situation, it didn't work out quite perfectly for that particular strategy, but remember that your 1040 put still has $6.30 of intrinsic value. So you didn't lose the full debit of this. It was only down about $3.70 if that's exactly what you took. But if you can understand the concept of that, then you can start stepping into other strategies that will work in a very similar way, where if Google would have pinned near these strikes, you still could have done very well with them, but by initiating a butterfly that you make a ratioed or unbalanced fly, changing the ratio of these strikes, then you can set it up to where you generate the entire trade for a credit and give yourself no upside risk. So with these two trades, or these three trades, these are the same one. The core part of the idea was that we would stay above the 950 put. If we came down into 950, that's where we actually butterfly out the best as a beneficial, ratio type trade. But of course, with it exploding higher, we just collect the credit that we initially received. These were kind of the very high probability, low credit type trades. And then we also did one that was a little bit lower probability, but yielded us a much better credit. So the butterfly idea heading into the report I think is still solid. Be willing to adjust, maneuver around, tweak and ratio these flies, and you can still come out on top. So I hope that was a helpful discussion. We did a very similar type of trade in Amazon. Of course, hindsight always being 20/20, I wish I would have been just a tiny bit more aggressive with it, but at least we got the direction right. So you can see this is another instance of the core idea in this, us being, trading above 975. We took in about the same credit that we did with the Google position. We have nothing to close out when this goes in our favor, so you can save money on your transaction costs. All of that will fall off, and then we'll just have some bullish opportunities that we're looking at as we get into next week. So I think those are very good strategies around earnings. I hope they are helpful to you as you run through your next reports that we've got up next week. I'm sure we'll have some other examples to talk about. So have a great weekend, and we'll see you at the next free video.